What is up everybody, Gifford here and welcome to another stock market options video. And today's video is all about me showing my passive income in July 2022, so a couple of months back. So getting straight into it, the agenda of the video is to show my total month's income from doing options. So this portfolio is my interactive brokers portfolio, a breakdown of the summary statement, a breakdown of some important trades that I've done, the conditions that I look for when I'm doing these trades. So if you're new to options trading, don't worry, I'll leave a link at the end of this video on a video how to do the basics of options trading and why I do it here. My interactive brokers account is not my only investing account, but I do use this mainly for options, which is making me passive income, and I put this money towards my Sharesies portfolio, which I'm trying to grow. So on the screen now is the summary statement of all my July trades, and at the bottom here in US dollars, not to be confused, it's $1,031 US. That's the proceeds that I made from the options, and there's also a commission fee of just under $20. So here we've got AMC trades, we've got BBIG, GME, LC, which is Lending Club, SAVA stock, and a little bit of TDOC and WBA. So it's kind of all over the place of what I was trading on, and I also did on semi here as well. So remembering P is for put, and then you've got the dates of when I actually do it, and then the strike price right there. So one of the trades I want to talk to you about is how I trade SAVA stock. Now this is a high premiums, however this stock is very risky. This is a biotech company who's developing right now a drug to cure Alzheimer's, and from here you can see that it pays quite a lot of money. So here $49, $83, $82, $45, $111, $200 of premium. So that's US dollars. Really a lot of money for these things here, and that's because it has a lot of risk with it. So this can be a trap for new players. If you start doing options and go, hey, look at this amount of money that this is giving me, this is heaps of premiums, but there's a lot of risk here. So you can see here that it is a negative PE company with quite a small market cap. So it means that it doesn't have any significant earnings, because this is really all about a research company, and biotechs is very dangerous. And you can also see that over the last year to date, that is actually down 12%. And this graph here, when you're trading options, is not actually ideal. See how it's going up and down? It's too rapid. The movements is just too high to constantly try to make money from this. So while you can try to time it, you will in the end get caught out. So just a summary of SAVA stock to show you how risky it is. SAVA Sciences Inc. is a clinical stage biotechnology company, develops drugs for neurodegenerative diseases. I don't know if I said that right, but anyway, revenue is forecast to grow by 43.85% per year, and here you can see a lot of the risk. So I'll just read them out. Earnings are forecasted to decline by an average of 42% per the next 3 years. High volatility share price over the past 3 months, and it also makes less than $1 million US in revenue, because it is just pretty much a research factory, and it's currently unprofitable and not forecast to become profitable over the next 3 years. And that's because it's all hinging on this research to make it money, because eventually if the research is good and it cures this disease, it will then on sell the data that it gets from there to other companies who will then make up the drug and then dispense it, and then they will sell that medicine for a lot of money. So while this company has a lot of premiums that it can give you, it is very dangerous, and I'm kind of glad right now that we're in October. I don't trade in this company anymore, but while I was trading in it, it was giving me good premiums. But in the end, actually, when I tallied it all up, I actually lost more money in this company because it was just so unpredictable to try to trade in. It wasn't very smooth. So in the end, I actually lost money trading in this company, which wasn't a very good thing. So now going on to another company which I traded in only once here, which is Walgreens Boots Alliance. Now this is the type of company that you really should be trading in, because you can see here that it has a very good PE, 5.29, and the share price is relatively sort of stable over the last year. So as you can see, for this trade, I only got $33 US for 1 week, I think. And in here, the lower premiums is due to lower risk, which is really what you want. So you got to be careful not to go after the fast money. This is a value stock because the PE is only 5. And usually you try to go for value stocks which are 10, and this one is well under. A lot of the tech stocks are over 20, and so it really shows you. This also has a dividend yield of 5.85, which means if you actually get assigned these shares, then it will start paying you dividends if that's something you like. I'm not a dividend investor, but holding this for the long term wouldn't actually be too bad. But you can see here that it's dropped down by almost 40% over the last year, so it's had a bit of a hard time. Fundamentally though, this company is a pretty solid company, and it's got a decent market cap at 28 billion. It has stable cash flow, however it does lack in growth. That's why it's getting hit here, because going into a bear market, into a recession, a lot of companies aren't going to be making a lot of money, and this is shown in the share price going down. So over at Simply Wall Street, which is just gives you a nice summary, we can see that its positives are it's trading at 75% below its estimated fair value, and that's because it's got a really low PE. Its earnings has grown by 159% over the past year, which is good. It pays a high and reliable dividend of 6%, which means that they're always paying out that dividend for you. So 5% of the total amount payout over there. I don't know what that calculates to be. You'll have to go into another website and work that out, maybe Yahoo Finance, and then work that off the share price, or having to go into the investor relations page. It's trading at good value versus peer average, so the price to earnings ratio, so that's always good. Trading at good value versus the industry average price to earnings ratio. So it's just telling you here that it's comparing it to its other competitors, and this is giving good value for what it's making, its revenue and its earnings. It's trading below our calculated fair price to earnings ratio, and analysts in good agreement that the stock price will rise by 27%, so that's quite good. And the risks here is that earnings are forecasted to decline by an average of 9% per year for the next 3 years, and there has been one large items impacting financial results. So you'd have to look at that if you're seriously considering this one. But this is a relatively safe stock to do options in. However, the options are going to reflect that it's being low risk, so you're not going to get a lot of money, which means you need a bit more capital to trade in this. But if you were to get assigned these shares, it wouldn't be the end of the world, because it's actually a good underlying company that makes money. So in summary, what actually happened for that month, I ended up earning $1,031 US, which is an equivalent of 1,800 New Zealand dollars for the month of July 2022, and I've actually been making roughly about $350 to $450 over the last, I'd say, 3 months. So I've actually been doing pretty well. Now this money is already invested back into my IBKR portfolio, and in my interactive portfolio it has between about 20,000 to 24,000 USD balance for my trading capital. So I need that capital to do all these trades in, because that's the money that I need to generate and get the passive income, and I try to keep it within that balance. If I get more than that, I actually withdraw it, but because the market is going down, I pretty much struggle to get it above $24,000 US in the short term. So just remembering stock tickers for options trading, you want to choose companies wisely when you are trading. In a bear market, all stocks will go down, so it doesn't matter if it's stocks that make money, which have good PE, or negative company stocks. Although the negative ones are going to get hit a lot harder, then their revenues are going to drop, and also their earnings, which means if they're already in debt and not making money, they're going to be making less money, and therefore they're going to actually be going backwards. And the next point here is that lower premiums for safer companies is better than losing your money. Well, thank you very much for watching. That is all for me today. If you're interested in investing, feel free to subscribe, and if you want to follow me midweek, feel free to head over to Instagram, as I post there every other day on stock market news and what I'm doing in the market. The trading platform I use is Interactive Brokers, Hatch Invest, Stake, and Sharesies for individual companies, and I use Investnow for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. And if you want to know more about options trading and how it could make you money in the future, some passive income, and you have some capital, hit this video here, give it a watch, and start learning. With that said, safe investing, and I'll see you on the next one. Goodbye.